Hello, my name is Sergio Estevio. I'm with Sigma Financial Solutions, Inc. I've had a number of new dentists approach me asking me the question, when should they incorporate if they're an associate dentist and they're being paid as an independent contractor? So I thought I would develop this, create this video presentation to address that question. And it's from a financial perspective. So a disclaimer, if you're seeking out legal advice about incorporating, seek out the appropriate legal professional to address that question. My discussion here is very tailored to those associate dentists who are being paid as independent contractors, and if it's reasonable for them to incorporate from a financial perspective. So let me go ahead and try to address that question, as well as this fundamental question: why would you even consider that? You would consider that because there's potential savings moving from an IC, an independent contractor, to an S corporation. And with respect to an IC, the IRS considers an independent contractor as a sole proprietorship. So when I refer to a sole proprietorship, it's in the context of the IRS, and it's, that is essentially equivalent to an associate dentist paid as an independent contractor. And within the state of California, if you are an individual dentist, you're either a sole proprietorship or you have the option to form an S corporation. So I'll limit my discussion to those two, and really those are the only two applicable business entities in California for an associate dentist who are paid as an independent contractor. So really, to address that question of whether or not there's some potential savings, you need to understand how each of these entities are treated from a tax and financial perspective. So I'll kind of go over that briefly now. So we have here an independent contractor sole proprietorship versus a S corporation. So within the sole proprietorship, what for tax purposes and financial purposes they're looking at is, what is your total gross income from all the 1099s that you might receive. So maybe you're practicing in multiple practices, each of which is paying you as an independent contractor. So you might get 2 or 3 1099s at the end of January. You would total those up to get your gross income, and from your gross income, then you deduct business related expenses. I mentioned a few there: dental supplies, any CE courses that you may be taking, association dues, malpractice insurance. Those types of expenses can be deducted from your gross income to arrive at your net profit. And your net profit is what the feds and the state use to determine your tax liability. So in this case, your net profits are subject to state and federal income tax, as well as self-employment taxes. And self-employment taxes are both Social Security and Medicare. And in a sole proprietorship situation, you are subject to both employee and employer portion of Social Security and Medicare. And that is approximately 15.3% of your net profit amount. So that tax could be relatively significant. So if you have a net profit of approximately, say, $50,000 in 1 year, your self-employment tax would be approximately $7,500. So a significant amount. And that's potentially where the savings could be under the S Corp entity. So that's why a lot of students consider, or new dentists would consider being treated as an S corporation. Again, in the limited circumstances that you are associate dentist being paid as an independent contractor. So let's kind of discuss the S corporation, a little bit more complex. The same top line here, in that your gross income is all the income reported on your 1099s, and from there you subtract your business expenses, and included here, you should note that you have to pay yourself a salary. In the S corporation, you're really dealing with two different entities. The S corporation is a legal and tax identity separate from you, the dentist owner, the associate dentist, and as such you're required to pay yourself in the S corp entity a salary, and that salary has to be reasonable for your position. And that's one of the keys that the IRS will look at, is they will determine if you're paying yourself a reasonable salary. But once you establish your salary, then you can deduct that salary from the gross income, as well as the other business related expenses, so your CE courses, association dues, malpractice insurance, etc. And as a result, your net profits, or potentially dividends are payments to yourself potentially in the S corporation, but in this case the net profits, I'll refer to them as net profits, pass through from your personal tax returns and are subject to both state and federal income taxes, but not Social Security nor Medicare. So that's where the potential savings comes in versus a sole proprietorship. The net profits are not subject to Social Security nor Medicare. Let's analyze this a little more, and then I'll address the but in that statement there. So let's throw out some numbers. Let's assume that your gross income is $80,000. From there, you subtract out those business expenses, one of which is, say, your salary. You pay yourself on a monthly basis over the course of the year, and as such you're paying yourself a total of, say, $50,000 over the course of that year. That's what you've deemed reasonable as a dentist, and then you subtract out the other expenses. So you have gross income, let's say, of $80,000. You have a dentist salary of $50,000, and the other associated expenses total out to an additional $10,000. So you have total expenses, including your salary, equal to $60,000. Subtract that from your gross income of $80,000. That means you have net profits or dividends available to you of $20,000. That potentially, that savings is a result of not paying the Social Security nor the Medicare associated with the $20,000 net profit. So the potential saving is about 15% of $20,000, or about $3,000, versus the sole proprietorship. Again, briefly, gross income of $80,000 less total expenses of $60,000, assuming a dentist salary of $50,000, would result in a net profit of $20,000. The savings then is what you don't have to pay in Medicare and Social Security, which is about 15%, resulting in a net savings of potentially about $3,000 in this scenario. Some of you may think, well, what if we drop our salary to zero? So you have gross income of $80,000. You decide not to pay yourself a salary, and as a result your business expenses are limited to just $10,000, and as such your net profit is $70,000. Then $70,000 is not subject to Medicare or Social Security, or 15%, and as a result you would save approximately $10,500 in Medicare and Social Security savings. Well, the IRS does identify those who attempt to drop their salaries below a reasonable amount. So if you do decide to drop your salary to zero, it's a red flag to the IRS, knowing that ultimately what you're trying to do is pay less or save on paying Medicare and Social Security, and as a result, the IRS could reclassify your income, allocate some of that or all of that to salary. Then you would be subject to fines as well as whatever is due for Social Security and Medicare. So you don't want to be in a position where you lower your salary amount in an attempt to save on Social Security or Medicare. So I hope you get a sense of what the savings could be in a S corp versus a sole proprietorship. Really, the savings is what you could reduce in Social Security and Medicare payments as a result of being in an S corporation. But you see at the bottom, there's a big but here. So that but really leads to this issue. When you form a S corporation, you're going to incur some additional expenses, and those additional expenses can be substantial. And I've listed a few there. So creating the S corporation will cost you money. You might have to hire an attorney, have the paperwork drawn up, file all the appropriate applications and filings to the state as well as to the IRS, and that costs money. So there's significant cost to creating an S corporation. In the state of California, you are required to pay a state corporate tax, and it's $800 per year at a minimum. So really, it's either the greater of $800 per year or 1.5% of your net profits. So if your net profits increase, then you might be in a situation where your state corporate tax exceeds that $800 per year minimum. In addition to that, there's some additional payroll taxes that you're subject to. So whatever you're paying yourself as a dentist salary then becomes subject to these additional taxes. The California State Unemployment Insurance tax, as well as the California Employment Trading Tax, as well as the Federal Unemployment Tax Act. So these additional taxes could amount to about up to 2% of whatever salary you're paying through your S corporation. So if you're paying yourself $50,000, potentially you have additional taxes of $1,000 per year. Because the tax returns associated with corporate and state and federal returns are much more complex, you're going to probably see additional tax preparation fees as a result of these more complex returns. Also, because you need to pay yourself, say you're paying yourself approximately $5,000 per month, you're going to incur additional payroll processing fees. Just something to consider. Those payroll processing fees for an individual, I would estimate that could be anywhere from $50 to $100 per month. So you're looking at added expenses anywhere from potentially $600 to $1,200 in a year. In addition to that, because you've established a separate business entity in the form of an S corporation, you need to account for your transactions a little bit more strictly. So you need to make certain that you're accounting for all these transactions, these financial transactions within your corporation. So you might have to hire a professional to make certain that your books are appropriately reflecting the activity of that corporation. So really, there are some additional expenses associated with an S corporation. So the question becomes whether or not those additional expenses are below the savings from the Social Security Medicare tax to justify creating an S corporation. So, should you incorporate it as an associate dentist paid as an independent contractor? It depends on your specific situation. Now, I shouldn't say without question, but if you're paid as an independent contractor and your gross income is $30,000, the savings from Social Security and Medicare are not going to justify creating an S corporation during that year. So there's just some additional expenses associated with an S corporation. You wouldn't want to pursue it in that situation. So really, to evaluate whether or not you should pursue an S corporation, you want professional help. And obviously, I'm here to provide that professional help. So you have my name and my phone number. You can reach me by Gmail. You don't want to jump into an S corporation because a colleague did it. You need to make certain that pursuing that, at least from a financial perspective, is in your best interest. And unfortunately, a lot of new dentists don't realize the expenses associated with creating a corporation and the expenses of that ongoing corporation. Those expenses associated with the corporation may exceed the savings that you realize from a lower Social Security and Medicare tax rate. It's something to consider. Again, give me a call if you have questions. I appreciate your time, and I look forward to speaking to you. Thank you.